Hey, good afternoon, everyone. Welcome to the PivotBoss Premium Trading Room. I am Frank Ochoa, aka PivotBoss. Thank you for joining me here this afternoon. This is the first day here back after the Labor Day extended weekend here in the United States. So the market's kind of shaking out a little bit here. We've had quite the moves here in various markets. It took a little while for the ES and the NQ to get going, but once they did, quite a bit move lower we saw, and then a little bit of a rebound back toward value. So we're going to take a look at some of these markets here. Again, I wanted to test the volume right now, test the audio, make sure everybody can hear me. So if you can hear me, you can put a yes in there or hi, say hello. If you can't hear me, obviously you'll likely type in there and say that you can't, and I'll help you out. All right, good to see you. So what we're going to do here is we're going to start off with a few futures contracts. Hey there, good to see you all, folks. We're going to take a look at crude oil, NQ, gold, the S&P 500 E-mini ES. And then we'll look at a few stocks as well. I've been searching around a little bit and looking at a few stock scans, just seeing what we might be able to find here as we kind of begin September. First, we want to get a kind of a higher time frame view of what September might bring, and then from there we can start to craft a few ideas or opportunities. So that's what we'll do. If you have any ideas or requests that you want me to go over, please feel free to type them in the box, and I'll cover them as we go through. So right now, I'm going ahead and getting started here with crude oil. Crude oil, I've mentioned to our group here for a while. I've felt a little uneasy with crude oil for a while, ever since about right in this zone here. This is when the personality kind of changed, was in here. You could see it. In the chart, you started to see it a little later, but you could see it intraday certainly. Up until that point, though, all this was fantastic, right? This trading, that was great. That was great. And then right over here somewhere, things changed significantly right around the 4th of July holiday. And from there, while crude oil honored our key levels and everything, it's just been a different market. So, the point is, I've had to be careful. You've had to be careful with some of these opportunities, especially us in the trading room. It's just something where we know that things are coiling and we know that a significant move is coming, but we have to be patient. And until then, we're going to see a little bit more chop. So what I mentioned last time, this is August 1st. So last August 1st here, the last market outlook that we did, I mentioned that the likely opportunity comes upon a bounce into about 50, and a rejection from there can bring us back toward 45.66. So that was the call last month from the monthly market outlook, just like what we're doing now. And it worked out perfectly. It took a little while here. We know that 50 was a level we've been watching in the trading room. We talked about it in the pre-market reports. Great rejections, great box reversal here off that level. And from there, we saw a major push downward. This was a major rejection of 49s, and that gave the last push in the 45.66. So based off of last month's analysis, it worked out picture perfect to that area. But I also mentioned patience was important with this one because it's still around value. This is composite value right there. It's that level right there, CVPOC, and it's 48.70s. 48.76 or 48.74, whatever that level is. That's value. And so right now it's just chopping above and below that level, and it's building energy. And at some point we're going to see a big move here. But the short-term opportunity worked out just like before when I mentioned this opportunity was our gold higher up to this zone, right? We started to work our way back. So, but right now it's much harder. It's significantly coiled. And is still chopping around value, so that makes it pretty tough. One thing I will say, this is something I talked to our traders in our room today. Anytime we have a major trend day structure like we did today, and we see significant trending structure throughout the session, and we close near the session's highs, In this case, we closed a little bit lower than where you usually want it, but it's up there, right? Whenever that occurs, a short-term opportunity usually presents itself to reject the previous high and return price back to the midpoint of the previous session. It's a short-term trade that happens after hours, so when the market reopens here after hours, into pre-market, overnight into pre-market, and it's usually done by early morning tomorrow, right? That's usually an opportunity that we look for, and it plays out a high percentage of the time. That's one to continue to watch for. Again, 49s has been significant here. I've mentioned it in the pre-market reports before. This is where bears have defended. Bears have defended. So right now, 49s are significant here. Short term, if bears defend again, at the very least, a return back toward the midpoint, which is 48.07. But that could also steamroll into a lower push into, say, perhaps 45.17, which is the next lowest FOMC key level. Because right now we're testing a few key levels at the moment. If there's continued rejection, again, you may see the next one down. So as of right now, again, crude oil is one you really have to be careful with. But there's likely to be more chop back and forth around value until we see expansion. So I'm more apt to fade this opportunity back and look to fade it back than I am look to see expansion. So right now, short term, very, very short term, watch after hours when the market reopens. There could be a short term fade back to 48.07. That could perhaps lead to a move back across, maybe not, but you know, it's just around here, it's hard to tell. Now, one thing I did want to do with crude was back out a little bit because it's been a while since I've done this. Backing out and showing a wider view here over the last several years. So you can see here, this is this is all of 2017, 2016, 2015. So we've spent the better part of nearly 3 years in this range here. But really, we've spent most of the last 2 years, at least a year and a half, in the middle 50% of this impulse range. I call that a neutral key range. For those of you in my trading room, you know I call that a neutral key range, and that's an energy building phase there. It's a neutral balance phase also at times here around value, but eventually it usually leads to significant expansion and a major move. So that's where we're at right now. We've kind of formed right here around the middle in the apex of this range. And here in a moment, we're likely going to see a move, perhaps up toward 54, 55, maybe down into 38 to 40. We're going to see a move one way or another. And that's going to be the hard move to time. It's always the hard move to time away from value because it can chop and whips on, whips off, and false starts so many times before it does it. The easiest move is always to let it play out to the outskirt here and then return it to value. Or let it play out and then return it to value. That's usually a high probability opportunity. So right now, you just have to be patient, continue to be patient with crude oil. Worked out very nicely in the prior period of time in August down to our 45.66s. Now, a little bit of a bounce up. High range day. I still believe that the trend is still up. That's why, the short-term trend move might be to 48.06, but beyond that, if this thing wants to start to break, we could start to move. So I'm not really expecting major resolution out of this range just yet in September, but that could start to happen throughout the rest of the month that build a framework heading into the rest of the year. So just a few thoughts on crude oil here. Let's go ahead and move on to the NQ. Now the NQ was one that was not really at an actionable position to do anything last month. Let's see, I think it was August 1st, which was somewhere about here. And I mentioned here that we're still testing the upper boundary of this key range. We're still testing 5,900. And I said, we're not really actionable here, but the one trade idea is selling a pullback into, say, the 59.30 to 59.50 zone for a shot at returning price to 5,800, 57.70. And so we got that move very quickly, and after that, it just tightened up the rest of the month. So the low of that move here came out to be about 47.60s, and so that's right into the 57.60s, which is right into the 57.70s off that level. We never really quite got the push beyond 59.50, not until recently, that is, and now we've gotten a little bit of a gap down. So this one did play out again with that one trade idea that we had. But what's really interesting about this one is, again, here's the key range. And this is the impulse range, the impulse move, where price sold off aggressively until it found a low at 55.50 half. Then it turned around and aggressively rallied until it found the high at 59.07 half. Then it turned back to the midpoint right away. That's your impulse move, and it creates a key range now, where the market now has the key levels to do business, right? We now have the blueprint that we can use. We look to trap down here for a squeeze. We look to trap up here for a liquidation. Perhaps we look to defend a bounce for a continuation. We look to defend a return back to midpoints here. So we know what we're looking for. And in this case here, a lot of what's happened is the market has mostly traded in the upper distribution here, in the upper 50% of this key range, which is very bullish. It still suggests that more uptrending behavior is likely to come. It's still, you can see right here, we're starting to break it to the upside. Here's perhaps a retest. And while we've seen a little bit of a pullback here to begin September, and even if we see a little bit more, everything is still sloping upward. And so bulls are still defending until proven otherwise. And there's been no significant source of rejection. Now, one thing is clear here. Last week in our trading room, on this day here, which was Tuesday, I mentioned that this rejection could lead us into 6K. We got that move Friday, we hit 6K, and here already we're seeing an initial rejection. That's kind of what happened here. Usually, again, fade new highs, fade new lows. That's kind of what happens. Once price gets up here, there's those that are taking profits, and there's those that are looking to reject and sell to begin a position. You kind of get that leads it back down. But overall, this thing's still trending up. It's hard, again, in this current zone to kind of talk about an actionable idea at the moment. But something I'm watching out for is still, how is price responding to 5,900, 59.07? So, that's the key level right there. If this thing were to come back, I still believe the bulls have it. So 57.29s, that's an area to defend for swing bulls. Position bulls I still believe 5,500 to 5,550 is a great spot to buy. So things are still pointing up. Nothing super actionable now. But again, the upside target, if we do start to squeeze, 62.64 half. For the NQ, 62.64 half. We're still using this key range. It's been up here this entire time. That usually means that this is likely coming. So that's the likely path here. And even if we do pull back again, that's still the likely path right now until price cannot hold 5,500 or 5,550 anymore. That's where this thing starts to break down, really. But in the longer term sense, this is still all eyes pointing to this level right now. So that's kind of my framework that I'm working off of with the NQ, although no real actionable trade from a breakout perspective. But this has been fantastic for you options traders looking to keep prices inside the range. It's stayed pretty well inside the range for several weeks. Let's see here. Looking at the next one, we'll go GC this time. Gold has been a runaway train to the upside. That may be a tell, big time. This is the first time in gold that we're trading these levels since in the post-election time, basically. This is the election night. last November in the US. That's election night right there, that big old day. So gold had a day that went from 1338 all the way down to about 1267, 1268. That was one day's range. And it took the entire year to get us all the way back to that blue line, which is the FOMC key level. And today we spent our first day trading completely above that level. And as I mentioned to our room, that's the first time that we've traded completely above the 1330 key level since September 26th of last year. So we've come a long way here. It all started with this little box down here where the thing stepped above it and held 1145s, and from there we were tentatively long. Then we started to get much more heavily long. We know that here was a little bit, we were watching until that day where we thought we could get up here in the 50 to 59. And since then, last time in August 1st, what I mentioned was there was more upside. More upside to 1300. And then once we get to 1300, we're going to look to fade. So let's bring this in a little bit. So August 1st, about right here, or right here rather, more upside into 1300 until we reject. And then so we saw that rejection right there. I mentioned to our room the area to reject is between 98 and 1300. Actually, Dwayne in our room mentioned 1298 was the spot he was looking to defend. And I mentioned 98 to 1300, and that's kind of the spot we locked in on, right? Very, very nice spot right there. And I mentioned it could take 1, 2, 3 days even. But by days 3 or 4, if you don't start to go in your favor, the stops usually come out. And so on this day right here, where it peaked above 1300 and slammed below 1285, it had everything it needed to break through 1285 and get back to value based off of that rejection, and it failed. And once it failed and popped back above 1285s, that's when I mentioned to our room that the short idea is off the table, and instead we're using the key range off of that move, which was likely positioning itself upside. So based off of that high, that was the key range high. We reached the target off of that range. So it was a turning point right here on this day where things went from being a trading range to an expansion. Because look at this right here. This entire time we had been trading in a trading range. And up here was when we finally said, nope, we're done with that, and we saw expansion. So we're at the highest levels since election day last year, and we could be looking at more upside. This one is very similar to how crude in the weekly time frame has that large trading range. Gold is the same thing, only it's starting to break out of its range. If you wanted to kind of compare them, crude oil is like right here at the moment, chopping around value. Gold's already breaking out and making its move to the edge. Remember I mentioned there's going to be a move to one of the edges. Gold's making this move to the upside. And in this case, 1375 to 1400 is the edge up here. So if you kind of zoom out, here's 1375, nice key level. Here's 1400. And everything in that zone has been offered. And we haven't even come into that zone since a year plus ago. So it's going to be a little bit to get up there. But 1300 is now the very, very important key level on a longer term basis for gold. I think if price were to return to 1300, bulls want to keep it bid for a shot at finally testing the upper end of the range into 1375. So it could be a 1300 to 1375 type of move. We've already gone a good part of that way, more than half the way, right? So a pullback of any sort here continues to drive to that end. So it doesn't have to necessarily come all the way back to 1300. That's just the major pivot. That could be as low as 1300. But as this thing starts to kind of curl up a little bit, you might see it probably hold 1315 instead. So this one is more of along the lines of buy the dips within the uptrending structure until you get to 1375 to 1400. At that point, there could be major counterparties coming into play that could look to push this back toward lower value on a longer term basis. So this one's still trending up. One thing I like to look for, failed new lows in an uptrending market. I say it every single time, but I have to continue to say the things that are so super important, because new folks come in, they hear it for the first time, it could change the way they approach trading. Veterans come in, they hear it several times, they incorporate to their approach, and it can change the way they trade. Failed range expansion is one of the most powerful concepts in all of technical analysis. So if you're in an uptrending market and price fails to hold below the prior low, that's failed range expansion to the downside. It usually leads to a sharp push higher. So what's going to happen tomorrow if price drops below 1330 here and bulls come in and defend 27s? If price pops back above this low, that could be the next catalyst that gets it going, right? We could also drop right back below here and all of a sudden make it resistance and start to work its way back. But it's a great little spot here to continue to watch. Again, in an uptrending market, failed new lows. Look at how that new low below these multi-lows failed, and boom, right? Failed new low here, boom. It's in the direction of the trend. It can also work in the direction of the downtrend, like right here. Failed new high, bam, right? Failed new high, bam. It's one of my favorites. So right now, this one's still trending up. Look to defend the pullbacks. ES. Here's the ES. The ES looks really sloppy, to be honest. I'm a fan of staying away from instruments or products when they're not really behaving too well. And then once they start to snap out of it, then you can jump in when things look good. This one looked like it still has an uptrending structure. It's still very bullish. You can see it here. Nothing really slowing it down. It's really not pushing to new highs. It's just kind of up there and just sitting. It's not really being aggressive about pushing to new highs. So it's very difficult to engage this one. Again, for those of you that trade options, this could be great for, a strangle or an iron condor where you're trying to keep price in the range. Very good for here. And then, of course, once you get something like this where you get a failed range expansion, you get this move up. For this one, what we were looking for last time around, which was the beginning of August right here, I mentioned that there's a potential in August. So say that's the beginning of August. There's a potential in August to see that August pullback, right? And I know a lot of people are talking about the September is usually one of the worst months, and October can be a bad month. And I noticed that August is usually a precursor to that. So we were looking for early weakness to begin with in August, and the idea was that early weakness could bring us back to about the 2430s right here. We pointed to this little blue line right back to that zone. So we knew we could get about there, and that was the idea. And then from there, we were looking for signs to buy for another rotation up. And I mentioned before, again, as I always do, that down here was a great spot to consider. In this case, once it created that impulse range, we were then looking here for signs of rejection back up. So this one here hasn't been the easiest. Again, it was we're finishing up the summer. Some volume and volatility is going to start coming back. I think for this one, on the whole, it's still trending up until it fails to hold 2400. That's the big level right there for me. That 2400 right there, if it were to break down, and really drive, then 2400 could be a big time barrier for a little while. And that's where you could get a meaningful pullback. I don't think we see that. You always have to be on the lookout for those signs. But right now, I think that if it were to even see a pullback to 24, that's a big spot to buy. And if it were to drop through there and keep going, 2300 to 2310 is another big spot to buy. Again, that would be major change in character from what we've seen. I think more than likely we're going to see further development because this is the range. It's 2400 to 24.90 is the range. That's the distribution, and at some point we will see expansion to the next distribution. So again, nothing actionable in the ES, still kind of energy building, but here's the key ranges that I've been using. This larger one over here I've kept in play just because the market's been honoring it. I can drop it off if I need to, but this is the one to really pay attention to, is the recent range from the 24.88 highs down to the 24.30s up to the mids of 24.59s. From there you have the key range, and that's the one to watch here. So which means if we do get expansion to the upside eventually, right? Say we do get a bad August, and bad September, and it comes down below the August low, below this low, man, it could be a fantastic move back to this level and then to the 100% expansion target, right? That could take us as high as the 25.46s. So 25.46. So all eyes point to this one right here, right? So that's where we're at. Still trending up until proven otherwise. It could always break down, but until we see something significant, this one's still kind of pointed up. All right, so there's a few of the major futures. I wanted to cover some stocks as well. No, that's not it. Flipping through a few here. This one's played out nicely. We had it as a buy there. Ochoa we've had a little while here. It's not on my board right here. This one's still going down. JPM. Let me see. JPM. Oh, that was a week after. That one's been working out nicely. Eastman is one that we're watching in the room right now. This one was brought to us by one of our traders in the room. Looks like a pretty good opportunity here. It's been trending up pretty strong. But one thing that's been steady is this trading range here. You can see 82 up to about 86s. And then here, that's the previous week's high. It's also the previous month's high. It was rejected today. Here you can see how price dropped down. Very, very weak. Anytime you're rejecting those highs like you did here, the expectation is typically a return back toward the recent lows. So 82 to 83 would be that zone. So right now with this, the way it's playing out here, another pullback. So say we get a pullback in the next day or two, that gets you back up to this zone. The mid of 86.32, perhaps as high as 86.80, which is about where the previous high is. Anywhere in that zone could be an opportunity to keep this thing going. So that was one that we were taking a look at here in the room earlier. Here's ALXN. This is the one I was looking for. I found this one on the scan a little bit earlier. The scan was the wick reversal scan right here. You can see the signal. Again, that's just a basic tail, right? A hammer or inverted hammer, whatever you want to call them. I call them a wick, a tail. But that pattern right there at the edge, above recent highs, right? And it's rejected. That's a pretty strong pattern at times. And depending upon where it forms, in a trend, it can be great for pullbacks. I do usually mention that if prices are in a choppy zone here and you form that pattern, that's what you ignore. You ignore those, right? That's straight from the book, chapter 2 of my book, Secrets of a Pivot Boss. By the way, Secrets of a Pivot Boss turned 7 years old this month. That's incredible. 7 years old already. I can't believe how fast that goes. I'll probably be doing here a little, if you haven't bought the book, there'll be a little birthday month offering here, perhaps on the next day or so. But yeah, 7 months, incredible. 7 years, incredible. So right here with this one, you see that right there is the key range that we're working off of. Price came below it here. Look, it did that lower high and failed, and that's where everything went bananas. That's what you're looking for in trading. You want the, for lack of a better term, the oh shit moment when traders get wrong. They're in the trade wrong, and now they're forced to run for the exits. This one had been free falling. It got below the key range low, a perfect pullback. Some fund gets in. However, right here it's being counter-absorbed, and then that fund is forced to liquidate, and man, the return is on, and then all of a sudden it's going the other way. There's a change of bias. There's the first retest after change of bias. There's all the trigger zone retests, and then it goes all the way to the opposite edge before you even know it. That's the type of trade you want to engage. That's incredible. So right here, we're at the edge. So this is just day one. I call this day one of rejection. And day two is usually watching the midpoint or watching the rejection or the distance between the midpoint and the rejected level and watching that area for absorption the upcoming day or two. And if price continues to stay below that zone, usually you form a range perhaps off this previous close up to that midpoint, and you form a couple of days of range here with bears defending this upper edge. And then they're going to try to return it back to value, back to the center of this key range. So it may take a while to develop, a day or two or three, sometimes more. Sometimes it could just start dropping and in one day it's back to here. Who knows? But right now, the idea is as long as price stays below 145s here, there's a good shot that price may return back toward 126.30 to 127s. Here's Dollar General. We had this one short also, but this one never offered a really great entry. It did on one day, but that was the rejection of that top end of the range. Here's the bottom end of the range, and our goal was to bring it back across. So, again, this one wasn't really great about offering entry, but it did its job there going across the range. That's the same type of concept here with the last one we were talking about. I did want to talk about Tesla. Tesla here, this one has been coiling up significantly. You can see it. It's almost a perfect triangle, right? That's almost a perfect symmetrical triangle. Apex right down the middle, 350. I mean, you could almost just put a straddle right on it and be perfectly neutral in the trade at 349.59 almost. Right there on the button, right? It's right there, and it's going to go. We don't know which way. We never know which way hardly, but most signs point up. Most signs point up. You could do a straddle here, but that's not my favorite. You really got to cover some ground. It has to be an extraordinary move compared to normal. We can see that volatility is rather small compared to average. We've had volatility that's considerably dropped since 4th of July. Keep that in mind for those of you that trade year-round. The seasonality of markets. 4th of July is about the time where all the volatility really falls off for the summer. And then you can see it right here. It goes into September, and then September is where you'll start to see it start to climb because you'll start to see this thing wake up. Perhaps it breaks up first. Perhaps it goes down, and there's a great bounce. I still believe that 290 is a great opportunity to buy if we were to get there. We haven't gotten there. So if we were to break out to the upside, 429 and 470 are the next two major upside targets. Breaking out here is one thing, but then getting above 387 highs and extending this thing somehow to 470, that's the type of thing we're looking at. And it's very reminiscent of what happened back here. It's the same type of deal. You see this thing get over here, it coils up like that, and then boom, it busts through that high, makes it support and runs. And that's the same thing here. Breaks through that high, makes it support and runs. So we've already seen this kind of movie before. It doesn't mean it's going to play out exactly like that again, but it gives us something to work off of. Gives us something to work off of. If there's any failure to hold a certain pivot, like say this 330 right here, then perhaps that gives a little more fuel to the notion that we might test lows. But again, I still think that's a buy. So right now, again, nothing actionable with Tesla. Super coiled up right at the apex. This is probably the day before some major breakout or something, it seems like. It's just right there. It really doesn't have much more room to trade before it has to start expanding its range. Here's one First Solar. This one's been trending up as well. Not really a great candidate in terms of an actionable candidate right now, but the trending structure has been upside. It's been holding LVNs. It's been building a little bit of energy here, and the focus is still on perhaps another trend move up. It hasn't really found significant rejection. Whenever it does find rejection, it's probably a quick move back to 38.52 value. But until then, still trending up a little bit. We are kind of a little bit at an important level at a round number of 50s. But this one's been quite bullish here. It's going to be interesting to see how that one plays out. Nothing super actionable again just yet. Now Tesla, if you're talking about Tesla here, this is one I've had on the board that looked like Tesla about a week ago. So this is SMH, the semiconductor ETF, and you can see here very tightly coiled. Really couldn't go any more tightly coiled than that. 85.59, the midpoint. Notice down here, what's that? Right here's the key range low. Failure, and bam, right to the middle. Not quite all the way to the top just yet. Very tightly coiled price action here. Right now we're breaking up and we're seeing a defense here. And so 87s are going to be very important. If at some point this thing can really start to break out and really go through 90, the expectation would be a move that could put this thing close to 100. So 93.84 would be the 50% target, and then 98 evens would be the 100% target of this key range. So that would put you within striking distance of 100 evens right there. So this one's been working its way sideways here, neutral to the key range. So again, here's the key range high, key range low. Look at how most of the trading action happened inside the middle 50% of that range. That tells you that's energy being built up, and when it starts to go, it's going to go big. So this one has a really good shot at seeing expansion beyond 90. Once it does, or should it push through 90, it could catch some fire here. So we'll keep an eye on it. Again, with these types of things, it's hard to judge it. So I don't want you to say, okay, I'm just going to get in right here because it might break out. That's not how I go about it. I have the idea. I look to get in at the best possible price with minimal adverse excursion. And sometimes I know that this type of expansion can go sideways another month or two, right? So that's why I mentioned it's hard to initiate a trade around value sometimes, and much easier once you see key rejection. So continue to watch this one as well. But it's starting to work its way to the upside, which means it could be working toward 94 and 98 pretty soon. Here's one that we've talked about in the trading room for a little while here. This one is Disney. Disney here, we thought it had a pretty good shot to fill pretty quickly to the upside and hasn't quite done it just yet. 103s has been the key level to watch there, and every time it's come into that level, it's backed off. Hasn't really hit a new low, instead quiet higher lows, not really committing one way or another, but there was a big gap down on earnings here last month. And the idea here is that this could be a box reversal opportunity whereby you have this key range that's formed, right? That move up, back to the mid. There's a box that is now formed below the key range low. But if these bears don't get paid here, they've been short for a couple of weeks now, but price hasn't really gone down, hasn't gone up either. The buy stops are up here, and that could lead to a move right back to the midpoint of the range, 106.77. Then you have composite value, 109.28. You got the top of the range, 110.83, right? So you see how this thing starts to work. But I'll be honest, this one really hasn't had the juice that you'd like to see. It's had its opportunities to go, and it really hasn't done its thing just yet. The idea behind initially watching this one was if there could be one good stop run day like this where the midpoint's at the breakout, that's the day that that's the true confirmation, and from there we can negotiate a re-entry, retest entry for a continuation. So that's something that I'll be watching for in Disney as well. All right, if anyone has any recommendations here, I'll go ahead and take those whenever you're ready. If not, let's see here. I think I had one more that we were looking at. Here's one we were looking at in the room here today, TBPH. This one formed a large impulse move. This is a biopharma company. Big time impulse sell-off, a big move back up. Look at the percentage move. This one went from 43 to 23, and then went from 23 back to 23 to 33, and now it's showing rejection yet again. This one here, after a big impulse move and a pullback here and keeping market structure, it still has bearish qualities here and a bearish directional move. We do have a little bit of higher lows coming in, so you'd like to see price start to get, below 29s. But for the most part, this one's still positioned downward with perhaps even a little bit of a sideways deal to it, because this was such an important impulse move that you tend to then see a little bit of sideways action. So this is one that you could then do a strangle or an iron condor on. If price pulls back and jumps again, that would give you kind of your range and kind of pinpoint where that is. Maybe perhaps say 26 to 33. So just something to watch out here on this one, but a very nice one. Yeah, let's take a look at AEO. Okay, this one's one we've been watching. Within these key levels right here, 1250 and 1050 were the important key levels on this one. We had it short here, it's dropped downward, it came down to this zone, right? We mentioned down here it's probably done. It comes back up to this zone up here again, and it's trying again. At some point, a range like this starts to break down and you really start to see expansion. I don't know if we're there yet. This previous high right here and taking it out was really nice. You can see right here that we did have this rejection tail that came in, and the midpoint, it closed above it the prior day, held right at it the next day after that, or still above it. So it wasn't perfect, but eventually it pulled back and now it's coming. So clearly the market is having trouble in this LVN above 1250. But I'm having a hard time selling it like before, or even buying it like before right here. It seems like things may have changed after this recent gap up. You can see kind of the impulse move, boom, here. We didn't quite get to the mid just yet of the impulse move, so maybe we do. But that's a nice impulse move right there. I think that range, once it gets back to the mid, could be very, very nice. And you can see that once it popped above right here, it's holding right above the moving averages right there. So that could provide a little bit of support. So this one right here, it's obviously been range bound, but I don't see anything that sticks out, like back here. I can see that bears are defending and rejecting, and that still makes a case for a little bit of a pullback toward 1150 and maybe across the range, but it's not as easy as an opportunity as it was before. Thanks for that one, Scott. Yeah, let's take a look at our goal. some of these gold ones I've been watching here lately, I mean, you know, kind of some runaway trucks here with the nice move we've seen. This one is a really nice one, right in the same path. You can see the stacked and sloped relationship here. Pullbacks defended, right? So the next pullback could still be defended. This thing's still continuing higher at the moment. So this one's still trending up very nicely. I'm trying to find when the top end of the range might be on some of these. I know for gold, it's 1375 to 1400, so we still have a little bit more upside there. From a longer term perspective here, if you look at the weekly chart of our gold, you can see it's also getting toward the upper end of its range here. So say above 90, I mean, that's special. If you've sold above 90 in the last 5 years, 6 years, you've done quite well. There hasn't been many people that have sold above 90. There's a few days here, a day there, and that's pretty much it. Likewise, if you bought at or below 40, right, you've been part of the select few. So how much more does this one have? I don't know. Right now it's going up, but at some point there may be a rejection signature that tells us that, uh-oh, I think it's time to come back towards 60. You know, maybe that's something that comes next. So right now this one's still trending up, but you can see where it is on the higher time frame chart. That makes me a little nervous sometimes, just because my natural instinct is to fade. Now, if this were to break through those highs and hold and stay above 90, right, say it doesn't get below 90, at some point, right, from this range here, at some point, right, it's got to go somewhere up, higher or lower. Yeah, this is a super wide range right now. It's I usually look to fade until proven otherwise. So we'll see what happens here. Now I wanted to take a look also lastly at an index here, which is the Russell 2000. We took a look at this one in our trading room today just to put the initial, the newest key range that's played out. So you can see right here the new key range. Impulse high to the impulse low, bounce back to the mid. That gives us a very, very nice little range here. Support at 1340. Every time we get to a new high, it's been a fade opportunity back down. So right now we're right at the center off of this range. We may see a little bit sideways to up, and then we could be looking to fade back down. 1340 is going to be the long-term level to watch. All right, everyone, I think I'm going to go ahead and leave it there. Thanks a lot for hanging out today. If you wanted to learn a little bit more about what we do here at PivotBoss, you can go to PivotBoss.com, and from there you can learn more about my book, Secrets of a Pivot Boss. Again, 7-year anniversary. I get great feedback on this book from traders all over. I still continue to get feedback that's great for it, so I'm so happy and grateful for that. Our premium trading room is a great trading room as well with a lot of great folks in it. And now that the market's really going to start to pick up here even more so heading into the fall, a lot of great opportunities to come. And then we also have Masters, which is our fantastic training. You can learn more about Masters by clicking here. It'll put you over to another website which gives you much more robust information. But a lot of great things that you can find here at my website, PivotBoss.com, with various wares that you can find yourself jumping into. I mean, you could really get lost for hours into some of this stuff with the videos we have, with the book, and some of the training we offer. So if you're looking for additional analysis or training or additional things to help build your skill in trading, I definitely suggest you give PivotBoss.com a try. All right, everyone. Well, thanks a lot for hanging out today. Thanks, Vic, Mike, Scott, everyone else who attended here. I'm going to go ahead and get this thing wrapped up and put out for you later on today so that you can get the recording as soon as possible. Have a fantastic rest of your day, and I will see you all soon. Take care, folks.